everybody, welcome back to our channel. In today's video, we're gonna be tackling a pretty big question for all you self-employed folks out there. How can you qualify for a mortgage when you don't have a traditional 9-to-5? It can seem a little bit intimidating, but we are here to break it down into simple steps for you. So whether you're a freelancer, a small business owner, or an entrepreneur, by the end of this video, you'll know exactly what to do to get a mortgage pre-approval. So let's dive right into it.
First things first, let's talk about the documents you'll need. Being self-employed means lenders need more information to verify your income and financial health compared to someone with a W-2 job. Here's what you'll need. 2 years of personal and business tax returns. Lenders want to see a history of your income to assess stability, profit and loss statements. These show the financial health of your business. It's a snapshot of how much you're making and spending. Bank statements. Lenders will want to see both your personal and business bank accounts to ensure you have enough cash flow and reserves. Business licenses or certifications. Proof that your business is legitimate and operating legally. Client contracts or agreements. If you have long-term contracts or agreements, show them. This can help demonstrate future income. Gathering these documents may take time, but trust me, getting organized up front will make everything easier as you move through the mortgage process.
Step 2 is all about showing lenders that your income is consistent. They don't just want to see big earnings, they want to see stability. This is where those 2 years of tax returns come into play. Lenders will average your income over those 2 years to ensure that you aren't having huge ups and downs. But if your income fluctuates, like many self-employed people, don't worry. The key is to have a solid explanation. Maybe you had a big project one year or a slow season another year. As long as you can back it up with documentation, you should be fine. You can also consider working with a tax professional or accountant who can help you prepare your financials in a way that makes sense for all lenders.
Let's talk about write-offs. We all love to save on taxes by writing off as many business expenses as possible, right? Well, here's the thing. The more you write off, the lower your income looks on paper. Lenders base your mortgage eligibility on your net income after deductions. So if you've been writing off tons of expenses to minimize your tax income, it could actually work against you. This doesn't mean you shouldn't take deductions, but try to be strategic in the years leading up to you applying for your mortgage. If you know you'll be applying soon, you might want to reduce your write-offs so your income looks stronger.
Your credit score is a key factor in any mortgage application, self-employed or not. It tells lenders how trustworthy you are when it comes to repaying your debt. So what can you do to boost your credit score? The first thing you can do is you can pay down existing debts. Lenders want to see that you aren't maxing out your credit cards or loans. The second thing is make sure all your bills are paid on time. Don't make late payments. That can hurt your credit score, so make sure that you stay on top of them. And lastly, check your credit report for errors. Sometimes mistakes can bring your score down, so make sure everything is accurate on your report. Even a few months of focused effort can improve your credit score and make a difference in the interest rate that you qualify for.
When it comes to getting a mortgage, a solid down payment can work in your favor, especially if you're self-employed. The more cash you can put down up front, the less risky you seem to the lender. Typically, a down payment of 20% or more can help you avoid paying for private mortgage insurance, and it can also lead to better loan terms. If you don't have 20%, don't worry. 10% can still be beneficial, but it's all about having that cushion to show the lender you're serious. So start saving today. Every little bit helps.
One common mistake self-employed borrowers make is mixing their personal and business finances. Lenders want to see that you have a clear line between the two. If you haven't done so already, now's the time to set up separate business accounts. Keeping your finances organized will make it easier for you and for your lender to see your income and expenses clearly. It also shows that you're managing your business like a pro.
So, once you've got all your documents in order, your income verified, and your credit score looking sharp, it's time to get pre-approved. This is a crucial step because it shows sellers and agents that you are serious and you are ready to buy. A pre-approval also gives you a clear idea of how much you can borrow so you can shop for homes within your budget.
Before we wrap up, let's quickly recap the key steps. The first thing you want to do is gather your financial documents. The second thing you're going to want to do is prove income consistency. Remember, not just balloon amounts of money. Consistency is key. Number 3 is be mindful of your tax write-offs. You don't want to do too many tax write-offs to show that you pretty much make $0. Okay. Number 4 is boost your credit score, pay your bills on time, and don't take out too much that you can't afford in credit cards and car loans and that kind of thing. Number 5 is save for a larger down payment. Remember, the more you put down, the more it shows the lender how serious you are, which means in turn, they don't have to lend you as much money. So, the 6th step is separate your personal and business finances. Don't commingle them. It's not a smart decision. And the last step is getting a pre-approval letter. Get pre-approved. Qualifying for a mortgage as a self-employed borrower might take a little more time and planning, but it's definitely possible. If you follow these steps and stay organized, you'll be well on your way to getting that approval and moving into your dream home. Thank you so much for watching this video. I hope this video helped you understand and clear up the process of getting qualified for a mortgage while you're a self-employed borrower. If you found this video useful, hit the thumbs up button, subscribe to our channel for more real estate and mortgage content. And if you have any questions or concerns or even tips of your own, drop them in the comments down below. And good luck. We'll see you in the next video.